The digital infrastructure sector is navigating unparalleled challenges and prospects in the face of the globalization, economic fluctuations, and technological advancements. Yet, the opportunity for business is unprecedented. Joining me now in Las Vegas, the Structured Researchers Infrastructure 2024 is Goncalo Bernardo, investment partner Palistar Capital. And Goncalo, welcome to Vegas.
Thank you.
You had a long journey to get here, but it was worth it.
Yes, absolutely.
So Palistar got into the digital infrastructure game in the last few years, but you've built a massive portfolio of $2.5 billion in assets under management. Talk us through what led the company to explore this sector and what are the opportunities that you're seeing.
Sure. The company was originally founded by professionals from the sector. So for many years, kind of the team worked in the sector. They were advisors to the sector. They've created our first fund in the sector, and then ultimately we kind of evolved, and probably were one of the first digital infrastructure players in the space. So I think the team comes from those roots, and then Palistar is just the latest iteration of that world and that experience in the space. So for us, although Palistar itself sounds like a relatively new vehicle, it's actually from very well-known faces in the space for more than a decade.
Okay, and then of course we are talking about the tremendous amount of demand coming into digital infrastructure. Some people say it's 10 times more, some say it's 100 times more. It's going to be even more than that for sure. How is the demand challenging the access to capital? How is that changing in the market?
So what I'd say is, a couple of years ago, everyone wanted to have to invest in the space, and or better, everyone wanted investment in the space. So you had a lot of data center guys, and again, it's easy to talk about data centers now. 5-6 years ago, you'd walk in some markets, and a lot of data centers were available.
Nobody knew what it was.
No one knew what it was. No one knew if it was real estate, if it was infrastructure. No one really had a kind of a clear view on the space. But they needed capital. They wanted to build. The hyperscalers were starting to take small contracts. I think over the last couple of years, that's changed dramatically. And what's happened is, you've got, for the top platforms that used to kind of have to run long processes to kind of get capital, now they've all of a sudden got access to capital. I think the one challenge is the quantum of investment that you need to have in this space is fundamentally kind of impossible for kind of the current funding sources. So the market's expanding. I think we've seen real estate investors coming to the space. We've seen new financing markets coming to the space. We've seen access to new instruments, and I think we'll keep seeing them in the near future. And again, the question most people ask is it infrastructure? Is it real estate? What we know is there are long-term, good, attractive assets that are supporting the growth of an economy that's more and more becoming digital. So I think it's inevitable that the capital is going to flow this way.
Okay. Then I guess another big topic within the capital conversation is interest rates. We've been talking about it since the end of COVID, but it's become much more prominent in the last year and a half. How are the changing interest rates kind of affecting access to capital or the deployment of capital?
So I'd say it's always a comparison, right? It's like everything else. There's a risk return. If you can, and for our own finances, again, for our own personal finance, we look and say, well, why should I put money in this more risky investment if I can get 4% in a long-term government bond that should be relatively low risk? So I think that affects things, and that ultimately comes back to the market. And again, ultimately most of the money comes from capital allocators, and they're always going to change their portfolio, and they're going to change their allocation based on where interest rates are. So if interest rates go up, they're going to have either less money available or a higher bar for the market, for the markets. And again, in this market, particularly when you look at things like hyperscale or even tower space, a lot of these contracts are long-term dated. They're very stable, very low volatility. So what you'll see is that these cash flows actually fluctuate a lot when the interest rate changes. The present value of those cash flows changes. So ultimately, the price is going to change. So it is changing the amount of capital. It is changing the valuations at which capital is available. So it is a massive factor for everything. But again, I think it's the same for every sector. The advantage we have is a lot of our assets are lower risk, so we're kind of benchmarked closer to the risk-free rate, if you want.
It's still a very good place to be, despite all the challenges.
Absolutely. It's a great place to be.
A barrier that's also coming up quite a lot in this conference is supply chain delays. I mean, no longer the COVID-induced delays within the supply chain, but just demand delay, because there's so much demand, the supply chain cannot cope with this. How is that affecting the project timelines and also the costs of these projects? and how can you plan for the unexpected?
Sure. So what I'd say is supply chain supply chain and power, particularly in data center, are the topic of today. What you have is you have a market where the end demand is growing faster than the supply chain. And the thing you need to remember is a lot of the suppliers are not specifically digital infrastructure suppliers. So if you think about data center, the guys providing cooling solutions provide cooling solutions for maybe 5, 6, 7 other segments. So when they're thinking about their production, they're not just thinking about digital infrastructure, or they're not thinking about data centers or maybe fiber or something else. They're thinking about it as a whole. So what's happened is these guys, and the other thing that's interesting is these guys have an historical perspective on all the other sectors. Again, the way we think about digital infrastructure, although it's been around for decades, is relatively new, but these guys have gone through booms and busts in a lot of other sectors. So ultimately the issue you have here is they will struggle to kind of ramp up if they feel there is a risk that their demand might disappear overnight. So ultimately what you need to do, like some people are doing, is secure your supply chain, make sure you're willing and able to kind of make the investment in it, kind of deploy the capital and kind of really create some of the integrations that, again, other areas have seen over the last decades, but that are relatively new to our space.
How could that affect new market entrants? So, for example, if I'm a startup and if I got $100 million, that's not going to move the needle nowadays. So, and that's already a lot of money for a startup. How can those guys come into the picture and compete in this market?
I think you've got to be creative. I think it's like every other market, relationships are important. I think who your client is important. Sometimes your client will have secured the supply chain for you. So it depends which part of the value chain you're actually in and which part you're actually addressing. So ultimately, it's a lot harder to be a startup today than it was probably a few years ago, but there are more clients looking for a product. So the market's gotten a lot bigger. So to your point, it's gotten harder, but it's also gotten easier at the same time. So I think it's, if you're a startup, you got to be creative. We see people kind of trying to bring equipment from overseas. We see people kind of trying to negotiate with suppliers. We see a lot of people just asking for capital before they've got the contract because they want to put the down payment in the equipment. So strategy is evolving.
There's always a niche to explore somewhere.
Yeah, and there's always someone making money out of it.
Yeah. So there's always
like,
good or bad. There's always money.
Yes, like again, you wouldn't talked about, or they were there, but equipment brokers and kind of people kind of trying to move equipment around were not as much of an issue. Kind of remember, it reminds me of the story with a footballer that kind of pays a deposit to get the next Ferrari or whatever, like, and some guys selling that deposit. Like, it happened. It's happening in the space. I think people are trading and some people are making money, good money out of the supply chain. So it's pretty interesting again.
Okay. And then looking into Palistar, so we've said you've got $2.5 billion of assets under management. How are you navigating the space? How are you raising, investing, funding? And not just within data centers, because you also operate within the cell tower space and fiber.
Yeah. So again, we're always looking, that's the advantage of having being specialist while at the same time having a bit of flexibility. I think we're always looking for the best risk-adjusted return, and we're always looking for the right downside protection as well. So for us, it's always, how do we stay true to our mandate, which is deliver long-term, kind of uncorrelated alpha to our investors, independent of where the interest rate is, independently if the market's going through a boom or a bust, and it's what we've historically tried to do. And I think, again, our investors are the judges of that. So we basically are constantly moving, and the strategy you're looking at this year might not necessarily be effective. When we invest for a long duration, but what we see is the windows change. So the strategy from this year is different from the one we were looking at last year, and it might be different from the one next year. And if we don't evolve and adapt, and again, we look at towers, we look at fiber, we look at data centers, and that might seem a very limited space, but if you include all the variants in there, it's actually a pretty wide space. And ultimately for us, it's the ability to have depth in that space and have expertise that really kind of helps us deliver on the promise to our investors. So that's what we keep trying to do. And again, I think the market, if anything, has plenty of opportunities.
Okay. If we are looking to 2025, how's the strategy going to change?
I guess it's a question mark.
Well, you've got 3 months left for the to plan.
Yeah,
so
we're still doing investments in 24. So I think it'll be a very interesting question how 25 will shape up. I think there's things that are clear on the radar, things like availability of power. There's things like the pricing in the fiber space, the availability of fiber itself. I think the overall timing of things. Now we're looking at a forward market for 3-4 years down the line. So I think ultimately you're also talking about a big factor that's a little bit unpredictable, which is regulatory. Like the U.S. going through elections, Europe's got its own challenges, and like a lot of these things are impacting our market very aggressively. So it's tough to say exactly what it will be, but it's a market where we still expect to see a lot of opportunities. And again, find that alpha that gives us a lot of work.
And then one last question, which I ask everyone. We are now at Infrastructure 2024. When we come back here in 12 months' time, what's the one thing you expect the markets to have done, changed, adapted, understood?
I think this market, again, I think you can do some very good long-term investments. I think the one thing I expect, I think demand for data will keep growing, and people will want more and more of it. And I think we will become a little bit more agnostic to how we get that data. I think historically people have been very siloed in thinking about it, and I think, again, just from the consumer-facing perspective, we see a movement in the industry where people are becoming kind of, I want to deliver connectivity to you, and I've got to figure out how to do it through towers,
bring the
towers,
ecosystem together,
fiber, data centers. So I think there will still be silos, but I think more and more the clients are kind of converging converging quite a bit.
And then I think if you add in the layer of regulation, the sovereignty, the data sovereignty aspect of it, and how data centers are almost becoming government owned in some countries.
There's definitely government control, and I think AI is
going to grow.
We got all the way almost through it without saying AI, so
we should for a change,
I can say that.
AI is a given.
So I'd say AI is changing that because it's becoming a sovereign advantage or sovereign competitive advantage. So we're seeing governments more interested in maybe not owning it, but at least facilitating and maximizing it. So I think that, to me, is going to be a trend. And again, there's plenty of opportunities for them to do it, and plenty of capital. And ultimately, we've got to remember that our assets are infrastructure, and infrastructure requires legislation, requires zoning, permitting, and sometimes that's a thing that takes the longest.
And to not even extend this further, but we saw the example of Brexit and GDPR. They actually drove a lot of data center construction in Europe, both Europe and the UK, during the two different events, basically.
Yeah, and if you think about it, like AI, I think things like that are more data sovereignty, and those things are really good and can play a very important role, and I think important for a whole bunch of privacy and security matters. But ultimately, you also have to look and say, and everyone wants to be in AI, and no one wants to be left behind, and no one wants the neighbor's AI to be stronger than my AI or to be using my data. So if anything, this probably feels like an enhancement of data sovereignty.
Sounds good. Goncalo Bernardo, investment partner at Palistar Capital. Thank you so much for talking to me. As for our home, thank you for watching, and do check our website and social media for the latest news on digital infrastructure, finance and investment from across the globe. At the Tech Capital, you lead, we report. Bye for now.